Sea Limited seems to have had a great earnings as the stock price is up over 21% in one day. We can see year to date the stock is up over 51%. Most of that gain coming pretty much just from earnings today. Unfortunately, from the 52-week high, the stock is still down roughly 40%. Again, it is crazy how some of these stocks prices are pulling back up because we can see from that kind of 52-week low, the stock is already up over 100%. And a great reminder of why dollar cost averaging, in my opinion, is such a great way to go. So in today's episode, what I want to do is the following. First, I want to take a closer look at Sea Limited's presentation and just do a quick overview of it. Second, there are a few questions from the earnings call that I believe every investor should hear about. So let's take a closer look in today's episode. All right, so this was the fourth quarter for Sea Limited, and obviously they're going to share us both their fourth quarter numbers and also the full year numbers. We can see for the fourth quarter, total GAAP revenue was up 7% year over year. On the full year basis, it was up 25% year over year. So if we take a closer look at the next slide, this is, in my opinion, the main reason the stock price is up today. If we take a closer look at total adjusted EBITDA numbers for the fourth quarter of 2022, this is the first time that it was profitable in this number. We can see same time last year was a loss of 492 million, where this year was a profit of 495 million. Unfortunately, if we take a closer look at the full year, numbers are worse than the previous year, and one of the main reasons is, right, we can see that digital entertainment, their gaming market, is not providing as much adjusted EBITDA profits as it was a year ago. And we know one of the main reasons is a lot of gamers stopped gaming after that kind of COVID reaction that we saw about a year ago. Kind of pushing forward, a great thing here, cash and cash equivalents, we can see is down over the quarter, 6.9 billion. But I do want to say it does seem like the burn rate is slowing down a lot faster than the previous was. We can see in fourth quarter of 2021, it was around 10.2 billion. And a huge kind of decline in the first quarter, in the second quarter, even in the third quarter. Things seem to be slowing down, and that's a great thing to see. E-commerce market, we can see GAAP marketplace revenue was up 44% year over year. This is still a growth story for Sea Limited. Adjusted EBITDA did turn positive this quarter, which is great news, and that overall helped with the profitability in the overall market. In forms of e-commerce, unfortunately, gross orders are down 12% year over year. But if we take a closer look at gross market volume, that actually was up 8% year over year on a neutral currency exchange basis. So we can see foreign exchanges is still impacting this company a nice amount. Obviously, gross orders being down 12% year over year. One thing to remember is they did close out of certain markets that they probably saw wasn't much profitability in the moment, so they exited those markets, and that could be a huge reason for gross orders seeing a year over year decline. If we take a closer look at the digital entertainment, unfortunately, bookings are down 18% quarter over quarter. On a year to year basis, they are down almost 50%, I would say. Quarterly active users still are burning. Unfortunately, gamers are not here, down 15% quarter over quarter, and down roughly about 200 million users compared to a year ago. Quarterly paying user ratio, though, is pretty much flat at about 9%. We can see, unfortunately, their gaming market, even though it is still profitable, it is taking a bigger loss. And this is one of the questions we are going to take a closer look at later on. A few analysts kind of brought a few points about their digital entertainment business. Now, the final one, and this is their digital financial service, that was up 92% year over year, sitting at $380 million in revenue. This is another question we are going to look at from their earnings call, and this is where they believe a huge growth opportunity is available for this company due to the overall synergies of their other markets. So now that we understand what happened, I want to take a closer look at that Q&A session. But actually, let's keep going on. We are going to see that cost of revenue is down. One of the main reasons this company was able to grow profits is the huge cut on expenses, especially that sales and marketing, right? Sales and marketing was down a nice amount. Same time last year was roughly $1.2 billion. This year, it was cut by almost a third to $473 million. We didn't see too much change in gross merchandise volume here for their platform. Remember, that was pretty much up on a neutral basis and down small single digits on current exchange rates. So it is pretty impressive that they were still able to maintain that, even though by cutting sales and marketing dramatically. But maybe this might be something that might hurt in the later on in upcoming quarters. Before we go any further, I want to thank you for watching, and I need your help to reach my goal of 30,000 subscribers by the end of the year. So if you can do me a favor, hit that subscribe button and thumbs up. Also, if you want some fantastic insight into the semiconductor industry, join my other channel, Semiconductor Investing and More, where I use my electrical engineering background to break down the semiconductor market. Finally, I want to thank the Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for their subscription service. Now, let's continue with today's episode. Okay, so next, like I mentioned, I wanted to take a closer look at some of the Q&A sessions and some important things from the earnings call. I got the transcript here from Motley Fool. So the first thing I want to talk about is this company becoming profitable this quarter. So we're going to see from Forrest Li, and initially he starts off by saying that for the fourth quarter, their net income and total adjusted EBITDA both turned positive. Moreover, they generated $320 million of cash from operations this quarter. If we jump really quick to the Q&A session, one of the analysts asked, hey, can you please explain to us on the major drivers that led to this really fast turnaround in Shopee earnings this quarter? So they mentioned a few things. First, they mentioned that one of the great things on the top line, they managed to increase their take rate and increase the monetization on a product that has high margins, and that is their seller core marketplace. Outside of that, they also kind of reduced the cost. We did previously see the charts that they did reduce dramatically sales and marketing. And they also mentioned that even though their sales and marketing for Shopee dropped more than 50% year on year, their GMV, or gross merchandise volume, sustained and grew around 7% on a constant currency basis year over year. Some other things that they did is they also exited markets and downsized operations. So unfortunately, we can see that when a company needs to be lean and efficient, they can definitely find ways to do it. I honestly would have wished that they would have done this a lot earlier and not just now during the overall macroeconomics that we're seeing. I do believe it was very important for them to note that even though they decreased the sales and marketing by 50%, they were still able to maintain that GMV and actually grow 7% on constant currency basis. Again, some investors might be worried that this might be a lagging indicator, and maybe in the upcoming quarters, we might see that GMV decrease because of the huge kind of decline in sales and marketing. At the same time, this is also a big company that used to provide a lot of incentives to drive more users into their platform, and they did exit a few markets that they were trying to grow and expand. So by exiting those markets, I do believe they were also able to decrease the amount of marketing and sales they needed to kind of drive incentives to their platforms or users to their platforms. That's the first question. The second question is on their gaming side. We can see an analyst here ask, first on the gaming side, if you look at your revenues right now, adjusted for the bookings, is just 6% above pre-pandemic levels. And if you look at user base, is around 20%. It does seem like benefits from the pandemic seem to have waned off during the fourth quarter. Do you see more stabilization now on the gaming side, or do you think there's still more headwind in the front of that? So I do want to say it's kind of crazy how much they have declined in total active users and total paying users and total bookings, but at the same time, they're still above pre-pandemic levels. So the answer to that question is pretty much it's still too early to tell based on the trends, and especially since COVID was such a crazy event that nobody has really has any data on it. The second thing they mention is, unfortunately, right now, is not just more people reopening. We are seeing this kind of global inflation, and that's creating a double headwind on people's discretionary consumption power, so reducing a lot of that bookings on the gaming side. But they have seen that, mobile games with long shelf lives have seen also revivals. And when they have the right content release at the right time and well received by users. So that's something they're focusing on. So they're saying that, hey, right now maybe we are a bit weak here in the gaming market, but we are still working on great creatives that, hey, in the upcoming quarters, we might release something with a great artist, with a great partner, with a great TV show or whatever, to really bring more focus again to Free Fire. And we do believe that is possible with their core products. There was another analyst that also asked another questions about the gaming side. They mentioned, can you comment about the near-term trend and full-year outlook for the gaming business? Just want to look at some color about whether we have any new games that we should be anticipating for this year. So the response was pretty much, hey, they don't normally discuss games until they're publicly launched. This is not what the investor event is for. But they do have a game on Dawn, which is being tested and it might get released this year. I was actually curious to see Dawn gameplay, and there were a few channels that are talking about this game. They seem that it right now is in very close beta and is still in early phases, but they do believe it's about to be released this year. It's been a game that's been in production for multiple years, 3 to 4 years it seems. So the hype is real, but I don't know if this is ever going to do the numbers that Free Fire did. So it does seem like C Limited is smart to understand that they need to make sure that their games like Free Fire still are strong players, and they make sure to continue to innovate in that space. But at the same time, they need to release new games like this one on Dawn to kind of grab more users to their platform. Now, the third question kind of focuses on Shopee, but mainly on Brazil. And this is something C Limited was able to improve dramatically. About a year ago, they were losing roughly $2 per order on orders made in Shopee. Now they've got that to less than 50%. So the question was pretty much asking management, hey, how are you going to be able to grow here in Brazil? And also, how were you able to kind of cut those losses dramatically in such a short amount of time? And management mentions that in terms of Brazil market, they managed to make significant gain in efficiencies in their operations, and also partly as a result of scaling. The drivers behind the vast reduction in order loss per order, similar to their other Asia markets, are coming from both top line growth, like we saw that they were taking higher take rates, but also as well as cost improvements, in particularly logistics costs. And they mentioned that they don't give any projections or guidance on ever being break even here in Brazil, but they do mention that they believe Brazil will eventually be profitable, pretty much like the Southeast Asia market. Finally, I want to end with their digital financial service business, SeaMoney. Like I mentioned earlier, that was up 92% year over year for the fourth quarter, and they talk very highly about the synergies here. For example, they mentioned SeaMoney's business is highly synergistic part of their digital ecosystem. For example, mobile wallet has resulted in lower transaction cost and a more seamless transaction experience on Shopee. Now, Shopee in turn has allowed the mobile wallet to grow its user base and build users' habits more efficiently. With Shopee, their credit business is able to leverage a larger captive user base, a highly relevant use case with significant scale, and a wealth of user insight for more effective underwriting. At the same time, Shopee benefits as consumers enjoy more flexible payment options, access to credit, and greater affordability. We expect their digital insurance, wealth management, and back businesses to enjoy similar synergies with their e-commerce platforms to serve the large underserved communities in their market. So they see SeaMoney as an important long-term growth engine for them. So while things did look pretty weak in the gaming side, I don't think it's game over, pun intended, but we did see some strong growth here in the e-commerce side and also in the financial side. And I do believe that's what investors are really excited about. To me, C Limited definitely has huge tailwinds behind it that can help this company grow dramatically. I just do believe right now in the overall environment, this is going to be one that's very volatile, right? A company that's up 21% today can definitely shift very quickly to the downside due to the overall market. And we saw year to date, the stock is already up 51%. C Limited is in my portfolio. It's one of my top holdings and it's going to remain that. I do believe for the moment it's going to be a little bit more quiet until we hear news like this, right? I do want to say this was a very shocking news to show how quickly C Limited can transform from burning a lot of cash to becoming somewhat profitable. So now I think investors are just going to sit and wait and see if this kind of profitability and growth is still sustainable for the upcoming quarters. And I do believe, again, for me, C Limited is something that in the long term has huge growth potential. In the short term, there's so many moving pieces that it can be a win or loss in the short term of things. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.